One is, of course, I mean, just what the markets per se did yesterday and staying within that midpoint range, 22,500 or today we might test the upper end of the range. I think the question marks would be out that do we kind of see selling at this 22,700 odd level, or is this a trend that builds up? So the broad range is seen, but for now, trend traders have had a really tough time, right? Because you're not able to trade on an uptrend. Some people are just used to doing that, and they are having a really tough time. Could this mark the change? Remains to be seen. So that is part one. Let's move on the points for the trade setup. So one is, of course, this. The other piece is, I mean, yesterday, along with all the data that came out, the fact that while exports fell, but imports have fallen significantly, and therefore the estimates on the CAD at 0.9% of GDP is really a big stability factor for the rupee as well, right? I mean, we've seen instances wherein CAD was whatever 3, 4, 5% of GDP, and therefore used to cause flight of capital, anxiety around what the currency could do. 0.9% of GDP is stellar. Yes, FY26 might be higher, 1.1%, etc. But for now, 0.9% of GDP, good stability for the rupee. I don't know if in part because of intervention or otherwise, but the rupee had big bumper gains yesterday, right? 24 paise at a single point of time, or 24 paise at a single point of time, which is very interesting too. And two pockets. One is cement. Now, all the conversations, I was in Chennai over the weekend, and the whole southern gang of investors, I can call them that, because Chennai is a very developed equity market cult out there, right? The Tamil Nadu Investors Association is a large body. Can't rival Mumbai, of course, but because Mumbai is the epicenter, but still very large. All very gung-ho on cement. So it could be very interesting to see if price hikes around the corner. I was told that for some of the cement companies in South, they have seen a 1% price CAGR for the last 10 years in cement pricing. Saying at some point of time, this has to give. It can't be that cement prices just don't go up. Yes, it's a commodity, but so is steel, so is a lot of others. So they're betting on cement. The last piece though, guys, BYD over in yesterday's session has rolled out charging mechanism, a battery mechanism, which charges the battery in 5 minutes flat. 5 minutes. Now, what can this do to one, electrification, and two, to the competitors that BYD has? Yes, on the global front, it's Tesla, but I think about the Indian manufacturers as well, right?
Yeah.
You and I all have this anxiety that 1 ghanta charge karna padega. 1 ghanta. What if this is the game changer? 5 minutes. You go in, you fill petrol for 5 minutes, you charge your car for 5 minutes, you get out. Can this be the game changer?
Wow.
So BYD is going to be the stealth story. By the way, stands for buy.
Build your dreams.
Build your dreams. So I think that's going to be just one point on the current account deficit. I just want, and I agree, the number is great, but a lower import is usually not the greatest sign either.
For economy.
For economy, because the lower import is pointing to muted demand, and a whole bulk of that import would have inflated gold prices built into it.
Yeah.
So then you
but
have
gold imports have also fallen, which is a good sign maybe.
Maybe because of the pricing. Maybe of the pricing, but then in the total number, they will have a sizable share.
Yeah.
So if your imports are dropping because your domestic demand is less, then that's a bit iffy. Even
yeah, for the economy, 100%.
No, but then economy market, all the current account deficit number then
yeah,
is
but
hiding
I'm saying
pain.
this in isolation for the rupee.
From the rupee and from the perspective of capital flows.
Yeah, rupee, I'm sure, is getting some boost right now from Mint Street, and perhaps it's time. But all right, so that's on the economic front, but we're getting you every angle to set up your day, and we're going across to Puneet now for the FNO cues that we should watch today. Puneet, what's on your radar?
Well, thanks for that. So, the Nifty 50 has been in the range-bound session of about 22,300 to 22,600 for the 6th consecutive session. Today, we're seeing a bump up across the highs of about 22,748 on the GIFT Nifty. It's higher than yesterday's high of about 22,577 that we saw yesterday, and multiple brokerages have come out mentioning that they're seeing a trigger on the upside because of yesterday's high, about 22,577 odd levels on the Nifty, up, as Neeraj mentioned, at 22,700 as well as 23,000. On the lower side, on the support, we are seeing immediate support at 22,200 as well as 22,300 levels, and sustaining above this level will maintain the current pullback as well as the positive outtrend we are seeing. And let's also look at the Nifty 50 futures, because we've seen the 75% point premium on the Nifty 50. While the open interest has fallen by 2% yesterday in trade, the Nifty Bank futures also trading at a premium of roughly about 131 points. We've seen the open interest on the banking side, though, increase by 1.49% at a level where it's been trading in between the 47,700 to 50,000 rupee levels. And it'll be very key to watch on the upside if this level gets broken anytime soon. When you look at the open interest distribution levels as well, that's something to watch out for, because we've seen maximum call open interest at 23,500. We've also seen maximum interest at 23,000 in terms of the calls, and whereas in the puts we've seen maximum open interest at the 22,000 odd levels as well. Finally, just some stocks on the open interest gaining side first. We've seen some positive long build up on stocks like PB Fintech as well as Bajaj Finserv. And Bajaj Finserv, we have the big news of Alliance and that Alliance breaking up as well, but it was a key overhang according to multiple brokerages, so watch out for this one. The other one's Titagarh Railway on the short build up side, and it's been continuing its downward momentum, continuing from the short build-up yesterday as well. On the open interest loser side, though, we're seeing short coverings on Ramco Cement, something that the cement majors in the south have been telling about. The tax hike by Tamil Nadu is hurting them. The other ones, on CDSL, we are seeing some long build-up as well. So overall, some stocks to watch, but the resistance level on the upside for the Nifty will be something to watch out for.